What's up, guys? Hope everyone is doing well. In this video, I'm going to be going over some updates for Bitcoin, but nonetheless, first chart here is the 6-hour chart, updating as you can see here, the descending broadening channel or wedge that Bitcoin has been in for since March of this year, over 6 months, over half a year. Now, zooming in, more recent price action, specifically since Bitcoin fell from 70K down to 49K, and then since then saw a quick, pretty rapid recovery, essentially a V-shaped recovery where we see right here, V-shaped recovery. Bitcoin has traded sideways along this median so far, and then has come up and made a local top within this trading range of around 65K. So far, Bitcoin is down roughly 4%, 3.5% at this point. I do think that according to these vector candles right here, 60K, we can see Bitcoin come down to. It also lines up with the 50 EMA band and the 200 EMA as well, which had been giving Bitcoin rejection this entire sideways action right here until it recently broke above it. The 800 EMA also sits at around 59.6. The median also sits at 59.6 approximately. As it, obviously is continuing to descend, so it's going to change depending upon when Bitcoin is going to move down to that, if it even does. But broadly, I think seeing Bitcoin come down around 59K, it's a lower bound to around, maybe down around 62.5. It's totally reasonable and overall constructive in a bullish manner. Although if we do look here at the candle closes, Bitcoin could potentially, as we see here, since 49, well, since more so around 51.5, Bitcoin came up, like I said, traded sideways, hit this, has bounced up. Will it find support somewhere around basically where it already is, roughly around like 62.3, 62.5, and continue to straddle this until it breaks ultimately 70K, at least before sometime, before the first half of September, so over the next 16 days or so, 20 days. Although it definitely could continue to come lower. If Bitcoin starts to close on the 6-hour or higher below around 57.8, could potentially retest the bottom again of this descending support of this channel, or it could continue to go even lower because, as I've said multiple times in videos of recent, and even going back multiple months, because Bitcoin's been trading sideways for over 6 months, it could totally come down to, like I've been saying, just approximately 43K, maybe wick a little bit lower, because that would only take it down to around somewhere around 43% total retracement, which is nothing out of the normal for Bitcoin during a bull market. Now looking here at each of these Fibonacci retracements, they are corresponding to, we see here from 15,000 approximately to approximately 30,000. This is the first impulse in the overall longer term bull market for Bitcoin. And then from 25K here, second impulse, to 75,000, we see another Fibonacci retracement. And then what has characterized each of these impulses is around halfway through how long this impulse took to play out in time, we see Bitcoin, the price of Bitcoin heading towards here the 618, topping out with respect to it, and then calming down and retracing towards the 382. See the same thing happen here as well. Set two tops, retraced down to lower bound of 382, also meeting the 618 once more. And each time this forms a ascending resistance and a descending support. Again here, ascending resistance, descending support, where each of these times, again halfway through the time of the impulse, we see a bullish megaphone formed within the same Fibonacci range. The first time the price went a tad bit above the 618, but ultimately you see this range is respected. Even is quite accurate down to where this first low comes down to the yellow, which I forget exactly what that is, the 457, and then we see the same thing here. This first set of lows, ultimately this megaphone pattern here looks like this. It's quite an ugly one if I say so, but nonetheless we see this structure in terms of support and resistance giving off that structure. But like I said, 457 is respected, and price heads closer towards the 382. The first time around, first impulse in this regard was a little bit more volatile, I suppose you could say, or deviant the fact that it went a little bit higher than 618, also went a little bit lower than 382, but nonetheless, like I said, each of these have been respected every single time. It's also, if you look here, 15,000 to 30,000, 25,000 to 75,000. So the first time around was a doubling from the low to the high. Second time around was a tripling from the low to the high. Now, assuming we see a similar structure, which I think is quite likely at this point, not just looking here in the microcosm in a shorter term, in the grand scheme of how long Bitcoin's been out for around 14, 15 years at this point. Seeing just fractal-like repetitive structures, self-similar structures in the progression of Bitcoin. So I think it's quite likely we'll see something similar in the sense that basically Bitcoin's going to move up. I think Bitcoin's met its local low. That is my current bias. I think Bitcoin will roughly just move up towards the middle of this, set some sort of megaphone-like structure, and then continue to move higher. No later than what I think right now to be around May, towards around $227,000 approximately. To be really specific, as I said, I generally think 150 to 250K is where Bitcoin will top out at. But outside of that, what also is similar is the fact that we look here at these trading ranges here, where Bitcoin was just going sideways for the first time after the first impulse, and the second time it's also again just roughly sideways. The lengths of these are also relatively similar as well. See, that was 150 days. I think this one's been a bit longer actually. From to low, it's sitting also at around 150 days as well. So each of these sideways, the sideways price action is in time basically the same as well after each of these impulses. And as I was saying, the first time around, the price doubled and then it tripled. So let's say next time around it's going to quadruple, which would actually put Bitcoin up to 250K basically on the dot, given that Bitcoin recently wicked down to 49.5, which, like I said, approximately is going to put it right up to 250K, assuming that the sequence here too. First time around it doubled, then it tripled, then now it would quadruple. But specifically, or my bad, I don't know why I was adding an extra 50K, so 200,000, so around, and 49,000, put it somewhere around 196,000 or so. So generally, like I said, just approximately 200,000, assuming this sequence continues to play out here from double, triple, quadruple, that would put approximately 49,000, 50,000 up to somewhere around 196,000 to 200,000 for the all-time high, but it could also definitely deviate higher as well. And overall, I would say that the longer term phase cyclical Fibonacci retracements that point towards 227,000 have a little bit more integrity given the history that goes into that specific view of the price action and also the higher time frame aspect of it as well. But moving here into the daily, so on this chart, going all the way back to here, 2013, July, Bitcoin found a bounce there. Each of these green rockets denote these periods in time where Bitcoin is finding support along this. There's 6 in total. The entire bear market low when it ranged sideways from 2015 to 2016 found support along this. The March crash of 2020 wicked down right to the top of it. And as you can see here, recently, as Bitcoin is bottoming out at 15K, found support there as well. And also as it bottomed out at 25K, found support here as well. We zoom in here, Bitcoin has wicked to it, so I definitely think this is really all that's needed. Doesn't necessarily need to come all the way down as far as it can, but it's already touched it, so I think that's already a very bullish sign to begin with, given that it does, like I said, in terms of support, go all the way back to 2013, so somewhere around 11 years at this point. Outside of that, going all the way back here and looking at phase 1 and 2 of cycle 2 for Bitcoin, we go to the top at around $30 in June of 2011. And we look here at each of these dots that I have here put above the price. Each of these dots represent death crosses, yet not death crosses are not inherently only bearish, which the name implies, but there have been plenty of death crosses, which you'll see, that have been bullish throughout Bitcoin's history. Within this price action here, so this is going to be right here, phase 1 of cycle 2, there's only one death cross seen, which ultimately was bearish because it was halfway through the bear market and just generally corresponded with the bear market of this phase 1. And then going into the phase 2 of cycle 2, so this portion of price right here, this time around Bitcoin saw 2 death crosses leading into one kind of, you could say, marked roughly the first local low. And a lot of times these death crosses will mark local lows in a longer term, like for example here, as you can see, this first one lined up with this local low, and then Bitcoin went up roughly, it went up more than 62. It went up roughly, 90%. But it was just a local low in a bear market, although, I mean, it did identify a low before 100% move. So death crosses, again, definitely not a bad thing. Like a lot of people or a lot of sources will, typically convey that, oh no, death crosses happen. It's just total doom and gloom. But what's different from phase 1 to phase 2 of the cycle 2 here is there was a second death cross, which was halfway into the bear market, roughly, at least halfway into this first low right here during January 2015. Then there is a third death cross, which is bullish. It literally happened right as the entire bear market from 2014 to 2015, from where this major downside and then leading into this sideways action, as you can see here, September of 2015 was when the third death cross happened, and it was basically the most bullish indicator that Bitcoin has ever gotten, because many people will argue that this bull market rather, from 2015 to 2017 was the most parabolic, most just wild price action for Bitcoin. And going into our current cycle 3, with what we can see here just being phase 1 of cycle 3. So this is a repetition of self-similarity, similar to how fractals operate. And the prior phase 1 that I was going over, where we saw, as I drew out and highlighted the W, then we see this basically this kind of ABCD pattern towards the upside. Obviously looks a lot different. It's taken longer to play out. It's decayed in various ways in terms of bear markets not being as severe and the bull markets not being as bullish. But yet again, we're seeing 2 pink dots and then a turquoise dot. So we see 2 bearish death crosses, and then the third death cross, which is the key factor to point out here, is the third death cross is insanely bullish. We see this right here for 2020, right after the March crash as well, after it had already bottomed out basically at the low at 3.2K. It wicked all the way down around 3.8K. And then we fast forward to 64 to 69K. What you see is Bitcoin's going sideways and setting a double top, bearish divergence on higher time frames. We see the 2 first death crosses, the bearish ones, printed. And then fast forward to September. If you haven't picked up, a lot of the times, a couple of these third crosses, or these bullish crosses, have happened in September. This one here also happened in September 2023. And then we just recently had one halfway into this month of August, which is basically, September's next month. It was only 15 days away from happening in September. So this is the third one that we've seen, going all the way back to the first one, which, like I said, so September 2015, September 2023, and then, right on the precipice of September 2024, it happened again, but just, like I said, halfway in August. If we look here down here at these little fractal patterns, each of these are taken. So this third one corresponds to this support found in this long-term uptrend, as I went over. The second one corresponds to here, and this third one corresponds all the way to this one back here. These are each of the times when Bitcoin actually went down to the bottom of the support zone. And you can see each of these times it performed basically the same, especially this first two. You see this double bottom happen right here, double bottom, and then there's a very very faint one right here where we basically see it happen like this, where Bitcoin set this first local low into the bottom right here, went up a bit, and then came a little bit lower and then set the second one right there. Now, to zoom in specifically on this current uptrend we've seen so far, going back to 25,000, having gone over all of the drawings, if we look here at the SMAs, we'll notice going back to 15,000 that we look here at the white SMA and the orange SMA, we see 1, 2, 3, 4. See this 4-stage crossing over, 2 below and then 2 above, the white ultimately going back above the orange in order to solidify the bullish movement for specifically the second impulse. And zooming in here, we're seeing the same thing as well. As Bitcoin is trading sideways, you see 1, 2, 3, and then the fourth one hasn't happened, but it's getting very close to and is looking positive for that happening. One thing that did happen before we saw the white go back above the orange, as it did right here, was you see the orange go below the black SMA. And the orange SMA, I believe, is the 25, no, it's the 100 SMA. So it's the 50, 100, and 200 SMAs from top to bottom, so white, orange, black. And we are very close to seeing the orange right here. They're very close to seeing the orange go below the black, as it did just right before Bitcoin began this second impulse of this bull market structure that I've gone over. Now, it doesn't necessarily have to cross, but the closer they get, the more Bitcoin gets closer to looking exactly as it did right here, basically in September, which funnily enough, September of 2023. Again, seeing September pop up again, like I said, with the crossing over of those SMAs. All of them, not just the death cross, as I was specifically pointing out under that context of September being important beforehand. If I move to the 4-day for the same chart and take out some more SMAs, this is going to be the 12 and the 25. The 12 is the purple and the 25 is the blue. On a higher time frame, since now the 4-day, we're seeing different SMAs do the same thing that the 50 and 100 SMA did last time around. So this time around, we're seeing the 12 and the 25 do the same 4-stage structure as the 50 and the 100. And again, like I said, seeing the same thing here, whereas this time around, the 25 SMA is acting as the 100 SMA, and vice versa, where we're seeing the blue go below the white right before the impulse. And we look here, these are, I believe, actually even closer. Let's get rid of the, here we can see how close these are, even closer than I was pointing out on the daily. Here too, looking exactly as it did, just to reiterate, in September 2023, as Bitcoin is heading right into September 2024. Moving on to the weekly, before I get to SMA pattern that I want to point out on the weekly chart, going all the way back to $30 of Bitcoin. When Bitcoin hit $30, and this would be the first cycle for Bitcoin leading into $30. This is the rejection of the first cycle, which set the entire precedent so far. I do think this trend zone that's held as support since 2013 will be broken with the next and upcoming bear market, as I think Bitcoin will head down close to as low as approximately 50,000 sometime around 2026, 2027. And then, so just to really point this out, because I think this is quite important, since the top of the cycle one of Bitcoin at $30 on the weekly, the candle closed rejected with respect to this ascending zone. Bitcoin, after that, came down, phase one of cycle two, double bottomed, came back above, found support in 2013, set the all-time high, phase one at around $1,200, came down 2014, 2015, bottoming out at just approximately $200, found support along this once more, headed to 20K, set the W again with the second half of the double bottom March crash of 2020, wicking down right to the very top of this support, heading towards 64 to 69,000, and then doing the same thing here as well as we then head to somewhere around 150 to 250K broadly, as I said. Now, take out those drawings once more. Now, if we look here at the orange SMA and the black SMA, you see the orange SMA went below the black SMA right at the beginning of the second impulse of the bull market so far. But if we go back in history, back to the very beginning of the black SMA, we see the orange never once in past history got very close, as you can see right here. Also got quite close right here as well in 2020, but it never happened. Did happen during the current bull market, and right now it is insanely close as I zoom in here to crossing back above that. I think this will find confluence with what I went over on the 4-day chart and daily chart with the other SMAs that you see here on this chart, forming that pattern from the daily to the 4-day. And then when we look here at the weekly and we look at the crossing of the orange above the black moving average, we also, if we go back to the sideways action, see that the 12 SMA went below the 25 SMA right as the impulse was beginning, and we're seeing the same thing here as well, where we see the 12 go below the 25 right as Bitcoin has wicked down to 49K, and given a lot of reasons on lower time frames and up to higher time frames that it has actually found a local low. It also respects the weekly, the higher time frame vector candles, as you can see right here, going all the way, basically wicking all the way down to the very bottom of the first high volume vector candle, which will show where Bitcoin is most likely, and a lot of the times going to meet local lows and uptrends and continue to go higher. And it also, just go back to the 6-hour, lines up. If we look back here at these Fibonacci retracements, you can see the sideways action at 25K just came, it ultimately respected the 618, didn't bottom out quite at 23.7K, more at 25K, but you can also see that 49K, which just right down, just a tad bit above the 618 as well. Ultimately, the candles closed more around 52K. Ultimately, the 618 is still being respected, and given the connection between these sideways and this overall bull market structure I'm going over, this is again another reason to, on top of these SMAs, many things pointing to local low being met and continuing to go higher. If we look here at the 2-day chart, as I went over this in depth in a past video, we're continuing to see, I think, a double bottom here that is very similar to August, September of 2023, which even factors into that long-term yellow uptrend that I was going over on the prior chart. If we zoom in here at this structure, this is also pointing to 70K. Right now, Bitcoin on this 2-day chart is above all of the moving averages right now. So hopefully, ultimately, Bitcoin, if it can get this RSI above around 68 here on this 2-day chart, that will likely lines up with the 618 and will likely line up with Bitcoin pushing towards it closer to 70K and above 70K as well. Moving into this 4-day chart, very similar to the 2-day chart. If we look down here at the RSI, we even got a further turquoise dot printed basically at a horizontal level with the first one that I pointed out, with the candles also closing basically at the same zone around basically 57,000. I was pointing out in a prior video that I think was thinking that the local low was set at around 53K. Ultimately, that is still held up because, like I said, the candles closed still at, the range is around 57 to 56,000. And the only reason why Bitcoin wicked to 49K was due to the influence that the Japanese associated with the yen and the carry trade that was going on and other things that happened more so in the the societal realm of, how that affects trading. Now, imagine that didn't happen, Bitcoin could have not even retraced like this, or, maybe it just went down nowhere near as lower, and ultimately this was the low. But fundamentally, Bitcoin is still, just printing more of a double bottom pattern. And if we zoom in here on this, we can see that the RSI has even flipped the median line of the Bollinger Bands on this indicator is flipped to bullish as well. Now that needs to continue to be sustained with further more movement towards the outside, because it could also just end up like these prior two instances right here and continue to go lower. assuming price is going to go back below around 56.4 at this point on the 4-day. There is a flat resistance also sitting at basically at 70K on the higher time frames, 4 days. You go down lower on these time frames, the resistance becomes more negative, more slope towards the downside. As you go higher, it becomes more flatlined. Moving in here to the weekly, it's very big. If we look here at the RSI is very close to breaking the resistance of the RSI we see right here. We saw right here as Bitcoin broke that last time around during the second impulse of this bull market structure that I've gone over. It corresponded with the printing of the first high volume vector candle, initiating the beginning of the second impulse of the bull market, and also the first candle that closed above the sideways range at around 30K during the first impulse, after the first impulse. So getting above around 56, 57, and also the price closing above the prior candle close all-time high at around 64,000. I was going to also, or likely, find confluence and correspond that with that as well. As I pointed out in an earlier video, we're seeing this descending support structure right here on the stock RSI as the price has done nothing but make higher lows, signaling hidden bullish divergence in terms of the acceleration of price. If we look here closely at the RSI, stock RSI, we can see that it is coiling up here, flipping turquoise or bullish. It just needs to continue to see the price ultimately needs to sustain its movement towards the upside to see this further flip into more bullish behavior. Similar thing on the MACD here as well. We're seeing early stages of a potential coiling up that could culminate in the final impulse, the third impulse of this bull market. And then also if we look here at the RVI, we saw the support structure holding up currently descending as well, similar to the stock RSI. And we're seeing the RVI is already broken above the Bollinger Band, so that's very, very good to see. Definitely, I would say the leading indicator. It's also, right up there next to this RSI as well for showing that things could get very, very big soon. Overall, like I said, we're seeing basically a 3 impulse structure. Ultimately, this is, according to Elliott wave analysis, this would be characterized as a 5-stage impulse pattern. Also, just again, factoring in the self-similarity and this kind of repetitive fractal-like occurrence, further validating that type of structure, where this time, contrary to a lot of schemes you'll see for that impulse pattern, each of these waves are becoming larger as it heads into that final pivot point at the 5th stage. A lot of the times the third structure, or the third impulse, which is going to be, or rather the second impulse, but the wave 3, which is the middle wave, is typically the most bullish, but they can come in all different shapes and sizes and criteria as well. There's also this ascending resistance here as well that is characterized so far. You can see first impulse topped out here, sideways action, second impulse went up and topped out at it, third impulse, depending upon when it's going to top out at, but if it tops out somewhere around March to April, May, it would start to enter 200,000 to 225, 26, 27,000, as I was mentioning earlier, specifically to my phase cycle theory and Fibonacci retracement, so on and so forth. Now I'm going to go over this chart more in depth. This is what these boxes mean in a separate video that I'm going to dedicate to that. But moving into this weekly chart here, I typically use, for example, here you see the Heikin-Ashi candles. These are the typical, just like kind of base candlesticks. And the reason why I want to point this out is to emphasize this structure here. Now 70K was being pointed at for the structures on the charts using the Heikin-Ashi candles, but when we use just the normal candlesticks, we see a more descending sloped structure where Bitcoin could break out and close a weekly candle at around 67.5 or higher, and that will be a little bit earlier confirmation on a higher time frame chart than the 70K of the Heikin-Ashi candles. And then this fractal pattern is just, again, a specific way that I think Bitcoin could play out, assuming that these impulses and this overall impulsive structure continues to play out in a self-similar fashion where, as I was saying earlier, Bitcoin continues to steadily rise here and then set some sort of a megaphone pattern leading into the all-time high. As I mentioned, around 227,000 or so. If you look here at this 2-week chart, I have here a macro uptrend that is respected to lows going all the way back to 2017, here 2018, 2020, also 2022. Just wanted to point out here that the downside from 2019 to the March crash of 2020 was when Bitcoin saw rejection from the median of this uptrend and also along the let's see, the 1.618 to 2x multiplier of this 350 daily moving average band. And then not only are we seeing the same thing here as Bitcoin has been trading sideways at all-time highs along the median, is when it got rejected right here at around 16, around 70, 73,000. Since then, like I said, going sideways for over 6 months. It's also meeting the 1.618x, 2x multiplier of the DMA band. Now, I do not bring this up to say that this is, Bitcoin, last time something similar to this happened, Bitcoin went down 72%. I'm not saying Bitcoin's going to drop all the way down to basically 20,000 again. I mean, it's totally possible. And there's definitely people within the cryptocurrency analysis space that are saying that this is similar to the local top set in 2019. But I just do not think that that's likely considering everything else. But if we look here at the little orange boxes here now, this first one corresponds basically to November, or November 2024, and then ends in October of 2025. I bring these up to point at the power theory of Bitcoin that I've mentioned it very briefly in a past video that has become somewhat rather popular recently, kind of creating a lot of stir in the cryptocurrency side of X or Twitter, with a astrophysicist, PhD, Giovanni Santostasi, something along those lines. I might be butchering that last name, but who has put together a theory of Bitcoin pertaining to power laws, which I'm not going to go over, but power laws will appear in a lot of the statistical phenomena that pertains to natural phenomena, such as formations of weather, various things when it comes to physics as well. And it's also, power laws are related to self-similarity, scale invariance, and basically ultimately fractals, and feedback systems that are characterized by feedback loops. But anyways, he, according to his power law theory, is saying that the full bull is going to begin in November, and that he's saying that the bull market's going to end in October of next year, basically within the same price range I've been giving, just somewhere approximately 200,000, give or take 30 to 50,000. Ultimately, I agree with this because I mean, broadly, both of us are saying that Bitcoin will not top out any later than 2025. I just lean more towards the first half of 2025, whereas he's leaning towards the second half. But I just wanted to quickly point that out because that's really outside of Plan B's stock to flow model, which I, at this point don't really look at that much. I briefly looked at it in the past, but it to me is just not as structurally sound in terms of the axioms of the model or theory, however you want to convey it, or whatever you want to call these systems of trying to understand and put some sort of lens on Bitcoin. It just doesn't seem the stock to flow model is grounded in reality as opposed to the power law theory due to its relevance in various, the statistics of various natural phenomena and how it's applied in generally in mathematics and then specifically in physics and even within biology as well because it pertains to biological phenomena. moving into the last chart here is this monthly chart. Now, again, I'm going to talk about the month of September as I was going over in a prior chart, how each of the, well, not necessarily all of them, but many of the bullish death crosses that I was going over earlier happening. I think it was half of them, or maybe a little over half of them, that were happening in September. The last two have happened in September, and then the third, well, actually, no, three-fourths of them have happened in September. And each of these vertical lines here are all overlaid on top of September, going all the way back to 2009. All the purple ones are bullish, and all the orange ones are bearish. Overall, there are, as we can see here, 2, 4, 7, 8, 9 active bullish ones, and then 2, 4, 6, 7 active bearish ones. Overall, there's 15, and like I said, 9 of them are bullish, which, funnily enough, factors out into a ratio of 0.6666 repeating until 7, or 1.6, so on and so forth, ending in 7, which is one of the approximating values of the Fibonacci sequence as it gets closer to converging upon the actual golden ratio being 0.618 or 1.618, which I find interesting, especially if this pattern will be held as time progresses, where we'll see the ratio of bullish to bearish Septembers just hover around a rough range of 1.618 or just 0.618, the golden ratio. But outside of that, what I want to point out is, if you look here, these are the traditional candlesticks or bar patterns, as opposed to the Heiken Ashis once more. And if we look here at the current monthly candle, this is what is known as a hammer candle. Very small body with little to no wick towards the upside, as you can see here. Zoom in even further. There's basically no upside wick, but a massive wick drawdown towards the upside with a small body, like I said. There's really, going back in the entirety of Bitcoin's history, there's really no other candle that has ever looked like this. I mean, you could consider this one right here one as well. The body's a tad bit big, but I mean, this is really the only one right here, August of 2016, which again, this is happening during we'll just extend the range, August to September, where we're seeing a lot of these, this ratio of bullishness to bearishness, kind of seemingly hovering around the golden ratio, which is interesting, and also the bullish death crosses happening in this August to September range as well. But yeah, and then there's this one right here as well. This, would be a hammer candle as well. It was more so at the beginning of this retracement. Ultimately, it did wick lower than the candles ever closed. So, I mean, really, that was kind of denoting where the Bitcoin bottomed out, really solidly bottomed out, at least with the actual closing of the candles rather than the volatile wicks. But these are a bullish candlestick pattern, as it's shown in past history as well, generally. Also, just again to reiterate, Bitcoin's been hovering around all-time highs. Every time in history prior to this, it's always been bullish, especially if Bitcoin is coming up from a drawdown of 70% or higher. But we do look here, I do want to point out that if I switch back here to the Heiken Ashis, that the structure where we see, as I've gone over in a past video, where we see on this monthly chart this ascending RSI structure. Bitcoin, again, has not touched it. It met this criteria, but it is very close, and it definitely does not have to come down and touch that. I mean, Bitcoin could totally come lower again, as I've been saying. Let's say the next month, let's say September, is actually going to be bearish per se. Ultimately, what I'm saying here is that ultimately it wouldn't be bearish, and it would just, let's say that Bitcoin goes down and leading into September, it just closes the candle lower, but it ultimately price never goes below 49,000 in September, and the RSI continues lower and bounces off here, kind of solidifying the structure even more. But at this point, as a summary, I don't think that's more likely at this point, all things considered. But everything being gone over and everything being said, as always, I hope you all enjoyed and were able to take away something in an educational sense from this, as this is not meant to be financial advice. But as always, I hope you all have a wonderful day.
Now won't I see you forever, such a long time.